Would you mind just kind of telling our audience a bit about your expertise and skill and what you specialize in? Maybe briefly touch on the DST to whet the appetite of folks who might want to go way back to episode 181, and then we'll jump into what we have to cover today.
Yeah, absolutely. So I grew up building real estate with my parents in California. We call it Taxifornia these days. And so we had to quickly learn how to build wealth, but also how to legally minimize taxes, right? And so that began the journey at a young age. And then fast forward, Marcus and Militech have helped people do the same thing on a larger scale. So multifamily, multi-million-dollar projects, properties, selling, doing 1031 exchanges. So all things like real estate investment advising is kind of what we do now, combined with a strategy that we've talked about in the past called a Deferred Sales Trust, which just kind of enhances the ability to defer capital gains taxes without using a 1031 exchange, which is really neat. It works for businesses, works for real estate, works for Bitcoin, and they can also invest into life insurance, right? And so you're not just tied to just one single asset class. You can go into stocks, bonds, mutual funds, passive real estate investing, or active. So that's kind of the real focus today at Capital Gains Tax Solutions. And yeah, you should go back and listen to that episode because you don't want to be trapped by 1031s, and you might have a multi-million-dollar exit coming up, and you want to know your options to be able to defer all of that capital gains taxes and to build like a wealth plan that really suits you.
Well, and everyone thinks they're making a smart, savvy tax move when they do that 1031 exchange. But you taught me this idea that when you do a 1031 exchange, you're forced into selling high and buying higher. Would you mind just explaining that? What does that phrase mean to you?
Yeah, so typically you're selling in the same market that you're buying in, right? You're buying and selling in the same market. And in fact, it takes about 3 years for the real estate market to really shift from the top to the bottom versus stock market or cryptocurrency. Cryptocurrency is like maybe the fastest, highs and lows. Stock market, the next highs and lows, right? It shifts because of the liquidity nature. Well, the lack of liquidity with real estate means it takes longer for the real estate cycle to shift, which means if you're selling today, you have 45 days to identify. You're really having to make a decision in that same real estate market. The second piece is if a seller knows that, Mark, that you're doing that, they're less likely to give you a deal or negotiate. They know you're in a 1031 crunch. You kind of have to buy, and that's the worst time to negotiate. And so we really want to practice the ability to sell high, dollar cost average, diversify, get some liquidity, pay off debt. And if the real estates come back a deal 6 or 12 or 24 months later, then we buy that, right? And by the way, real estate is not just equity investments, it's also debt investments. And so this is the part where we want to expand the mindset here. The biggest mistake people make is thinking that the 1031 is the best option when oftentimes it's really just not.
That's right. Yeah, I've never been a fan of the 401k, and I kind of view the 1031 as the real estate version of a 401k, meaning we're deferring, and hopefully someday the capital gains will just disappear. Well, it doesn't. What we want to do is spread out that tax through maybe a DST or something like it. But never say never when it comes to the tax man. The tax man cometh, whether we're ready for it or not. So that brings us to the ultimate outcome that a lot of people are looking for when they come to talk with me, or when they maybe meet with you as well. We're having one-on-one advisory consultations with folks. We're looking at their concerns, their goals, and they'll often tell me, Mark, I've got such and such real estate property. I've got such and such in an IRA or a brokerage account. And I'll just talk to them a little bit about, well, what do you like about it? What do you not like about it? Ultimately, we get to the point where we say, here is what this account is for. Let's say I've got $700,000 in an IRA, or maybe I've got 2 or 3 rental properties worth, with an equity of $700,000, just to keep the number the same. The question then becomes, well, what's it for? And if you really pushed somebody to say, what is this rental property for, or what is this IRA for? Ultimately, 98% of the time, they're going to say it's for income. I need to translate this pile of money into a lifetime income. And now we are specialists in helping them with guaranteed contractual annuities, income like that from life insurance. But you have a strategy that I wanted to talk to you about today that brings truly passive income to your clients. Would you mind just walking folks through what it is that you help clients with when it comes to creating truly passive income?